Hello traders, this is DAX recap video for Tuesday, January the 29th. As usual, in front of us is the updated chart with the adjusted zones that was posted before the open, and this was the situation in the pre-market. So market was inside of this structure looking like a bull flag, and I also posted additional chart of the S&P just to emphasize that the market is in the trading range, and not to have some big expectations of the market moves, because ranging market, as we already know, can range for many days, and inside of this range it is better for us to go zone to zone and to hit and run, take 2-hour trades and run for the hills. So in the morning notes, the most important things that I have said here is in this zones part to prepare you that buyers can react on this yesterday low, likely to react here on the bull bear zone, that in case of the up move they are likely to react from the yesterday high zone, and that in this kind of environment market is prone to make false breaks, and we already saw that yesterday. False breaks are something that you should expect when market doesn't have enough momentum to go with conviction on either way. And as we can see today, that theme was continued, that market made a false break of the yesterday low. We had a pre-market low also there, and then went higher without testing this zone. So these texts I'm going to delete now. It was meant for the Twitter posting on Twitter. At the beginning of the session at 9 a.m. market was already inside the yesterday low zone. And this was the pre-market range. This here was pre-market high, this is pre-market low inside of the zone. Now, whenever we have additional references inside the zones of the interest, that is additional reason why would we react on those zones. And if you took a trade here on a yesterday low, depends on your stop, you will be either stopped by this poke and false breakdown, as I said, 10 to 20 points, and getting back inside the zone usually means that it is a false breakout attempt, or breakdown in this case attempt, and it was exactly that. Like 20 points, just 20 points below. If you're waiting here, I had the order there at the bull bear zone with confluence with this bear flag, didn't get a fill, but then it was additional chance for us to go long. So this is the first long right at the open, leaning on the yesterday low zone and the pre-market low. And remember, whenever market is contracting, like now when we have a 100-point range, and market that is going sideways, that is indecisive markets, there you could always think about how will market react on low and high from previous day, and that there could be, that is something that is usually that market do react on those kind of zones. And this was a perfectly valid trade. Now depends of your stop. If you got stopped here, or you were waiting for a better zone, didn't get a fill, now on either way, got stopped, not got stopped. If you're not stopped here, you're holding. If you're stopped or missed this and didn't get a fill here, your entry point is when the price make a move inside the zone. Here is our second long opportunity and entry, or even if you missed all of this, pull back to the top of the yesterday low zone, because we should expect that the market will spend some time in a zone or retest our entry. In this case there was no retesting of the entry, but market did make a pullback to the top of the zone, and that was third opportunity to go long from here. And additional help for you: we have yesterday high zone, we have yesterday low zone, but you could also draw yourself a rectangle and, you know, extend it to the right like this, emphasizing the previous day range. And in the morning it would look like this. And now you have this movement. And now it's crystal clear that this is a false breakdown. So there are some, you know, tips and tricks for you how to, you know, to help yourself deciding to take action. And if you took action here, logical, or here, whenever, you know, on whatever of these three logical places to go long, closing of the trade should be, first target should be pre-market high, like this here, a few points below, or here, and second target is below yesterday high for us to get the feel, because we don't know, is it going to test yesterday high to the point, or is it going to fail a few points below and that we don't have a feel then. So it is best, you know, to skip this opportunity, so to speak, to grab 5 additional points and just close somewhere around here. So this is the first trade. It is a long opportunity, and now we have a classic clear-cut fade the zone kind of trade where we are fading yesterday high as we were prepared in the morning notes. Sellers can react on yesterday high zone, and it would be, you know, a usual thing for them to react there. But the reaction can be like 15 points and then whoop, above. You don't know that in advance, but you do know that this is a decent zone of resistance and you should be there. So this is our entry for short, with again targeting. Now pre-market high was already, price went through couple of times through it. Pre-market high now doesn't really mean much. Yes, it can be used as a target, and the previous cash close can also be used as a target, but now comes the correlation with the S&P, which is very handy for this trade for you to squeeze more points if you didn't close it at the pre-market high. And you observe what the S&P is doing, because this trade comes when the S&P is already open. And this here was like 4:30 p.m. So US markets was already trading for 1 hour. And in the same time, if you observe, this is S&P. I have that somewhere, yes. This is S&P, not 15 minute. Now this is a 5-minute chart, obviously. But nevertheless, the story is here. At the open, market went just above their own overnight high. This is overnight high, this is overnight low, made what? A false breakout and gone lower. And DAX also heading lower, and you can close DAX when S&P starts here to, you know, balance, when you sense that this move is done, or you don't sense it, whatever, but this is a support. So S&P made a move from overnight high to the overnight low, while at the same time you had a short DAX from yesterday high zone going into pre-market high or previous cash close. Now in this here time, S&P was still going down, and you could just push your stop capturing some points. It is good for you to simultaneously monitor DAX on one screen and S&P on the other screen, or at the same screen, whatever you can do on your platform. And this was very good to have that correlation and to monitor DAX and the S&P together because look at this time, it's like 5:25, 5:30, and at the same time here was S&P already bouncing from support. That didn't made a lower low. So this was the warning sign for you to get out of your DAX trade. And you could squeeze more than to just close here on the pre-market high. But even if you are closing here on the pre-market high from the let's say middle of the zone to the pre-market high, you got 35 and 40 points. To the cash close you got much more, like more than 50 points, 50, almost 60 points to the previous cash close. So this was here a good trade and a clear-cut setup to just short yesterday high, as was noted in the morning notes. And that was our second trade, in which you didn't felt any heat. I know that I wasn't feeling any heat in this trade whatsoever. In this one here we had a pullback, also no heat from this here entry. From this entry there was some heat, or maybe it was a stopper maybe, but then you must really enter here again using that rectangle as a help for the previous day range, and to observe and to be ready for false breaks. DAX has had a false breakdown of the pre-market low, and as you can see, S&P had a false breakout of the overnight high. This is something that is very usual for sideways indecisive markets, and that is a very good entry for you. Those are very good entry points with very high odds that you will get at least 2-hour trade out of it. And this is it for this edition of DAX recap videos. I wish you good trading and good night.